your experience with prop firms so far, even through, like I said, many prop firm challenges that you've failed and also passed and been paid out over six figures. Overall, do you think that the prop firm space for traders is a positive, or do you think it's a
But
negative?
the one thing I will say about the 1 minute chart is you have to have a good filtration system because there is a lot of movement. I knew my system was a trend trading continuation model. So in a ranging environment, it's gonna lose money because like my entry model, any entry model doesn't make money 100% of the time. It only works in a certain context or criteria.
What's up, traders?
So
Welcome to the Day Trading Show. My name is Austin Silver. If you're new, today I have James Bruce with me as a co-host, and we sit down with Rich. Rich goes by RichQFX on Twitter. A lot of you probably know him. He's kind of famous because at the pinned top of his Twitter page, he talks about how many funding challenges he's failed that's led him to over six figures in payouts. So we talk a lot about the funding companies and all the craziness going on there, but we also talk about his strategy, what he thinks about some of these other Instagram, Twitter influencers. So it's a great conversation. Rich is a really, really good guy. I think you guys are going to love this. I want you to make sure you check out the link down in the description. ASFX TV is now just $10 per month, and you can take a 3-day free trial to come trade with me and our team of full-time traders. So definitely check that out. I've got links for Rich's Twitter and everything else in the description as well. Enjoy the conversation, and thank you for being a subscriber to the Day Trading Show. What's up, traders? Real quick, a break from the episode to thank our sponsor for today, Lux Algo. Now, this is important. Lux has a huge Black Friday sale going on. If you don't know who Lux Algo is, you've probably seen their ads on Instagram, maybe on Twitter, something like that. They provide a ton of indicators on TradingView, all different types of indicators, from trend-based indicators to ICT and SMC indicators. They're even building one for us at ASFX that uses anchored VWAP and our A2 strategy. They have 3 premium indicators that I really, really like because I can line up their premium indicators, which use AI to generate trade ideas, with my A2 strategy for like a double confluence of a really profitable trade idea. So down in the description to this video, I have a link and a discount code for you to take advantage of this big Black Friday sale that they're rolling out. I want you guys to use the link, use the discount code, and this new software that they're rolling out, I think can make a big difference in your trading. Check out the premium indicators, check out their new backtesting software, and do it now while they're running this Black Friday sale. You don't want to wait. And again, thank you to Lux Algo for sponsoring the podcast. Now let's get back to the episode. What's up, traders? Welcome back to the podcast. So today I've got my co-host, James Bruce, in the building. First time in a while, James. And I've also got our special guest, RichQFX. We're going to call him Rich for the day. Rich, it's good to have you here, bro. Thank you for giving us the time.
hey, what's going on, man? Nice to be here, and I'm glad that you had me on here. So yeah.
Dude, absolutely. Everybody's seeing your content all over Twitter. So I was like, we got to get this guy on here. I know you have a lot of experience with funding companies. And also, bro, I love that your pinned tweet is about your funding challenge, like failures, not about how much money you've made. Because like James was referencing today, we were talking in the group chat or yesterday, James, remember you were saying that thing about saying Lucci and you were like, show me your losses, show me your losses. Like that's what a real trader does. So for you to have that pinned at the top of your Twitter, bro, that was like, all right, I know this guy's been in the game for a while. He kind of understands everything. But I also, Rich, I couldn't find any really like detailed interviews with you. I know you haven't maybe done too many of these. So I want to get your story out there, bro. I want to get everybody to kind of know you a little bit more. So give us the 30,000 foot overview, if you don't mind, Rich. Start there. Like, how'd you get into trading? How long have you been trading? That kind of thing.
All right, so I'm 24 now. I started trading when I was 15 years old. Well, I started paper trading when I was about 15 years old. And then about a year, maybe 2 years later, I opened up a joint account where I started trading stocks. That's where I actually started from. Um, and I started learning from, I know he's still popular, Timothy Sykes. He
Yeah,
had a
bro. Me
bunch of,
too. That was the first guy that like I got into
really?
trading. Yeah, bro. That's so funny. Around 2015, 2016, same time. So we must have
Uh-huh.
been in the same algorithm on social media or something at the time.
Had to be, had to be. Um, I kind of took his stuff, kind of didn't. Especially with, with the stock market, you needed 25,000 to day trade, so that was a barrier for me. And they had a prop firm that I kind of traded with, trading at a long time ago, but then they shut out U.S. clients, so then I moved over to Forex, and I've been kind of trading Forex for a few years, and then I moved over back to Nas 100, which is essentially the stock market. But yeah, man, I've been trading for about 9 years now, and with prop firms for about 3. So
I love it.
yeah.
And your experience with prop firms so far, even through, like I said, many prop firm challenges that you failed and also passed and been paid out over 6 figures. Overall, do you think that the prop firm space for traders is a positive, or do you think it's a negative?
Oh, definitely, it's definitely a positive. Just I mean, the sheer how do I guess you could call it leverage on your money, because I mean, there's not a lot of places where I can take, let's just say a 50K account where I can take 300, 350, 350, and just by passing the challenges, essentially you turn that into $5,000 in equity. So there's not a lot of places where you can do like, what's that, like 15 times your money.
Right.
Um, and I mean, most of my challenges, I speed through most of my challenges now. And I guess we can talk about that later, just my method on taking on prop firms and prop firm challenges. But I kind of speed through them, so I know um like I'm going to pass like taking a bunch of them. I know I'm going to pass at least a few of them, and then getting a payout from there. Because even if you fail a few challenges, if you get a decent payout, it'll pay for all the challenges and then some. And that's kind of my
100%.
approach. But it's
100%.
definitely a different ball game, because I mean, before prop firm, I mean, I was putting 100, 200, 300 in the account and blowing it the next day. So
Trader's
with prop
Way,
firms, you
Hugo's Way, whatever it was, right?
yeah. Oh
Yep.
yeah, that was the go-to, Hugo's way.
Yep, yep,
Uh-huh.
yep, yep. Same thing, bro, for all of us. So we all started from that. And now I do agree with you too. I think James probably does as well. It is a positive overall to leverage money and use other people's money to have more buying power with not having to put as much
Mhm,
risk on the table from your side. Totally agree. Let's go into the
mhm.
philosophy though, bro. Talk to us about like how you view these funding challenges. Cause I think at least me and James were talking before, we were saying like the way you can tell from your content, you don't look at these things like kind of how I do. You look at them like I'm going to buy a bunch of them kind of and work through and
Yeah.
fail a few to then pass a couple and make that money back. So give us like the overview of like how you view it. And then we'll get into how you
So,
speed through them.
okay. So the way that I kind of view them is I see it almost like a trading account. It's like no one trade should matter. So like one challenge account shouldn't necessarily matter.
Hmm.
Um, and that's where you see a bunch of people um they'll save up, save up, save up, say I'm gonna, try a challenge in 3 months and save up that whole 3 months and go for a big 200, 300, or I don't know what, I think I've seen even 300. I think that's the biggest I've seen, a 300K account. And you see people going for these large accounts, and it can, I mean, just the emotional side of it can be very hard when you've saved up everything and your everything is in on this one challenge, as opposed to them taking that 1500 and saying, okay, I'm gonna take this. And because again, if you have an edge in the market, you letting the law of large numbers play out more. So if I had, let's just say $1,500, and let's just say 50K accounts were 300, that buys me what, 5 accounts?
Sure. Yeah.
Based on my edge, I know that at a bare minimum, if in a worst case scenario, I'm gonna pass at least 2 of those. If I fail the other 3, pass 2 and get a 2% or even a 1% payout on those 2 accounts,
It
that's
pays
paid
for
for.
everything.
Yeah,
Right.
you
Yeah.
probably even doubled that 1,500. So
Yeah.
yeah,
You know what I think, James?
that's kind of how I treat them.
What do you think of that when you hear that, James?
Yeah, I think it's a tough one. You have to have like the right mentality for that because
But it
how do
does
you
make
know?
sense when he positions it like that,
Definitely,
doesn't it? Where he says like
of course.
you have to look at it like the trades you take. You don't know if you're going to win or lose. You don't know which
Yep.
challenge you'll pass or fail. So it does make sense to maybe not put. I do, and again, I also agree with not
Yeah.
putting all the eggs in one basket of like save, 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 and then fail that one big challenge. That's going to mentally, it's going to suck. So I do agree with
Yeah.
that,
What?
100%.
How do you get over? Like, let's say you fail 2 challenges in a row, right, Rich? And then how do you get over like that mental? Because it can be quite shit when you fail a challenge. Sometimes
Uh,
like even if like, okay, man, I'm gonna buy 5, and I know I'm gonna pass at least 1 or 2 out of these 5. But let's say you fail the first 2. Like, how do you get over that mental barrier of being like, well, do you change your approach? How do you take that?
It's football season. Everybody's excited, but you're probably paying like 40 to 50, maybe 60 bucks a month through YouTube TV or Dish TV or NFL Season Pass, whatever it's called, just to watch the games, right? Well, for $10 a month, you can come watch me and other full-time traders live all week long. London session and New York session. Again, you're paying 50 bucks a month to watch football that brings you really no financial return. You probably lose your sports bets while you're watching, or you could come pay, you could come pay $10 a month. So during the week, you can be learning, making money, and really being a part of live trading with experienced traders. That's what we want to bring to the community with this ASFX TV product, and we would love to have you join us. So click the link down below, take the 3-day free trial, check it out, again, totally free, and you'll see it's more than worth the $10 a month, and then you'll be able to enjoy your NFL games and your ASFX TV streams.
So I'll answer this in the form of because like or even now, and now I don't have my foundation because I had like I think it was a little bit over 500K in funding with my Forex funds, but now that's gone, so I'm building back up. So I'm starting back from that foundation. So I'll answer it in that regard. So if I were to fail the first two, I mean, I think it all just goes back to knowing that you actually have an edge in the market. And um having a mechanical system, I've back tested it and I know for a fact that it works. um Building my foundation, I will risk less because okay, so when I had my foundation, I could be more aggressive. I would pass or fail a challenge in 1 or 2 trades. Like that's kind of how I approached it. So with the foundation, I'm now stretching it out to maybe 4 to 6 trades where I'm either going to pass or fail in about a week usually. Um, so I'm not spending a lot of time in these challenges, and that's another thing. I think that's the reason why it kind of works for me because I don't like staying in challenges and putting forth the effort and seeing my edge play out, and I'm not actually making money off of it. I'm just making progress in the challenge. That kind of I don't really like that much. So that's kind of how I would just reduce the risk a little bit more, just to involve more trades and let the law of large numbers play out a little bit more.
How much
So
risk do you normally put on trades, Rich? Like 1%, 2%? Like what do you normally, do you have a fixed percentage? How do you view that?
so phase one I do 2%, phase two I do 1%, and then live accounts I do 0.5%. And the way that kind of breaks down is I need 4 or actually phase two I do 1.25%, not 1%. So
Okay.
phase one, that breaks down to 4R. I need about 4R in order for me to pass that challenge, and then the next phase I need another 4R to pass. But when I'm very aggressive, I might break it to where I only need 2R for phase one. So I might go all in and risk 2,000 on a 50K account if my because I with my mechanical system I only go for 2R. So if I risk 2,000 on this trade, I got about a 50% chance that I'm either gonna pass phase one, and
Yep.
worst case, I'm not gonna fail it. I'm just gonna hit close to my max drawdown, and then I get another chance the next day. Um, so that's kind of how I treated it: 2%, 1%, and then 0.5%.
That's good. I think that that idea is something of like trade the challenges a little more aggressively and then size down as you do get funded. I think that's something everybody's probably doing at this point, or at least they should. So I think that's great advice.
Yeah.
How about how many trades per day do you have? Because I've seen your MetaTrader screenshots. Some days I don't remember off the top of my head, but like some days it looks like a lot of trades. Some days it's not as many trades. What's a typical week or even a typical day look like as far as how many trades you'll take?
So with my mechanical system, what I've seen, it'll range from most days are about 1 to maybe 3 trades, but I've had days where that system produces maybe 5 or 6 trades, which is a outlier. But I would say with that system on average, maybe about 3 or 4
Yeah.
um on a good trend day. But lately I've been trading kind of more so discretionarily. So I kind of treat my mechanical system as that's kind of like my 9 to 5, and then my discretionary trades are the trades I have more conviction in. And I don't know like if it actually has an edge or not, but I know like I guess my experience in the market is kind of
Yeah,
my
you have
edge
an
in
intuition
that
about
way.
something, right? For sure.
Yeah.
Right.
So with those, I don't really have a limit, but in with my mechanical trades, I kind of limit. I don't limit my trades. I limit my losses. So I'll say if my first, if I go down -2R on a day, I'll stop trading with my mechanical system.
Okay, so that's
So
good. I think people definitely like that. What about profits? If you go up 2R on a day, do you stop or do you keep going?
mm-mm.
You just keep going.
No, never. I never. Yeah, just keep going.
I agree 100%, bro. I think if you're having it like today, I had a good trading day. I had 2 for 2. Like if you have the opportunity to keep scoring, why would you you don't just stop at 1-0, right?
Yeah.
Yeah, yeah, and I think that's like because some people were talking like they had, which I guess maybe as you get higher numbers, like you're just a huge trader and one trade is like 6 figures. Like maybe you should like cut your trades, cut trades out. But like for me, it's the way I see it is if my especially on days or weeks or months where my system is actually working, it has to be able to pay for those future times when it's not going to be working as
It's a
well.
great point. Great
So
point.
I gotta push it. Yeah, you gotta push it when it's working, you gotta push it to pay for when it's not working.
Yep. Yeah, I love that.
So
Where did you learn? No, so I got one more question, then I'll
yeah,
pass it to
yeah,
you,
100
Bruce.
go. Yeah,
Where'd you learn to
Mm.
trade, Rich? Because like some of these concepts are like solid. So who would you credit some of like your teaching? Because if you got started in 2015 with Tim Sykes, I know for sure that is not the way you are trading today.
No, definitely not. I would say, I mean, there's a lot of people because I mean the system that I trade now is fully mechanical, it's kind of indicator based. So but before it had ICT entry, but it wasn't ICT's like higher time frame context or anything. It was just the entry model. I think it's called like a purge, but then I kind of cut that out and replaced it with the indicator. Um, I would say just from it's I can't I can't really credit one person. I mean, I've watched so many videos and courses and everything, so it's a multitude of people,
That's awesome. No, I
honestly.
think that's a lot of people that have lasted as long as you and me and James. Like that, when you end up just being in the market that long, you take in a lot from people, and sometimes you take in things that you're like, okay, I don't want to do that. You know what I mean? So I think
Yeah.
that's a good answer. What were you going to ask before I took the microphone from you, James?
I was going to ask, what? So obviously, I know you're trading that the Nasdaq US 100. But what time of day are you trading? Are you trading after the open, pre-open? And how big are your stops? Like, are you trading? So when you say you go for 2 hours, how big are your stops? Are they 10 points, 50 points? How big are your stops normally on average? I know maybe it's not a set amount, but yeah, how big are your stops and what time of day are you trading?
So time of day, for my system, I only trade from 9:30 Eastern time. So I break it down into sessions, kind of like so 9:30 until 11:30. That's kind of like a very volatile session for New York, or the stock market in general. And then from like 11:30 to usually about 12:45 is like a lunch period. I kind of look at that like the Asian session of the whole New York session. And then if the market is actively pushing, I'll start trading again from 1 p.m. until my cutoff time is 3:30 p.m. Eastern time.
Love
And
that.
Nice.
as far as stop losses, it's based on one of my indicators. But I would say it can range from anywhere between 10 points to I've seen it as high as 50 points on a very volatile day because it's based on the moving average, which kind of it'll adjust to volatility. So it just ranges based on how volatile the market's moving.
I feel
Mm.
like too, James, it's not like, especially when you're trading indices, because the volatility does change day to day. Where like, I feel like Forex pairs, the volatility doesn't change day to day as
Yeah.
much. Would you agree?
Yeah, I would agree with that. Like normally, if you're trading like GJ, it's normally going to be like this kind of the same amount of pips on ADR.
Right. Like ADR, right. Like ADR doesn't go from like
Yeah,
210 to 110
yeah,
overnight. But
yeah.
sometimes if you have
In the
like a
stock
day of
market.
news or whatever,
Yeah.
stocks might not be moving until that news comes in or whatever it is, like an FOMC day in the afternoon or whatever. So yeah, it's good to hear that. So do you specifically trade NASDAQ, Rich, because of the volatility? Like, is that also part of the edge that you have? You want that gas?
Yeah. So the way my in a nutshell, the system that I trade is I need a trend on the higher time frame. I need a trend matching that trend on the lower time frame. So higher time frame uptrend, I need a lower time frame uptrend, and I need high momentum. And then I need a pullback in order for me to get in. And I have numbers for all of those. So I have a certain indicator that objectively identifies when all of that is there. But Yeah, the volatility on NAS, I haven't traded a forex pair in maybe 2 or 3 years since I started trading with prop firms. I haven't traded many forex pairs because of the volatility on NAS 100, and also I know exactly what time the stock market opens at 9:30 Eastern time. Like I know for a fact that that's when it's going to start to move. With forex pairs, it seemed a little bit random where it can move at 3 a.m. or it might move at 3 p.m. in the afternoon, or it might move at 12 o'clock noon. It just seemed kind of random. Especially I trade on the 1 minute chart. So maybe if I was trading on a higher time frame, it would be different. But um yeah, that's the main reason why I trade NAS.
I'm in the same boat, bro. Once I got with the prop firms, I was like, oh, this is a no-brainer. I want to trade indices now. You got good
Uh-huh.
spreads, low commissions. I'm like, and I like it. And it same time zone as you. I'm in the East Coast, so it's the same thing. Like it's
Hmm.
I can go work out in the morning and could go like now I've been some days doing 2 a days, work out in the morning, trade, go work out in the afternoon. So it's been nice, bro. I totally am in the same boat with you. When you say we got to dive on the 1 minute chart because you're now shit, bro. I've had a couple of guests in the last 10, probably 3 or 4 of them trade full
Hmm.
time and trade the 1 minute chart. And I think that melts
Hmm.
people's minds, at least especially like a new trader. They think that, oh, if you're
Yeah,
trading a 1 minute chart, you're a degenerate gambler. You must be like,
yeah.
you know what I mean? Just slinging money around. So can you give a little just give us a little more details on how you're making the 1 minute, why you chose the 1 minute, maybe?
So the one I think I've always been kind of a fast trader. Like I've always gravitated towards fast things. And again, that's probably why we talked about with the prop firm strategy, I'm a little impatient. So maybe that's why I trade on the 1 minute chart. I don't like being waiting and well, I mean, even for my trades, I have to wait for them to set up, but I don't like waiting for them to play out, which usually on average my trades might last anywhere between an hour to I mean, well, honestly, 15 minutes to maybe 2 hours. That's about the range. Um, I don't really like waiting, but the one thing I will say about the 1 minute chart is you have to have a good filtration system because there is a lot of movement on the 1 minute, which it was hard for me to kind of develop. Um, but I just went about it kind of logically. Like, what do I want? I want high momentum. Okay, what indicator matches up with high momentum? I found ADX, and then I needed a lower time frame bias. So like I only want to be buying if the lower time frame is in an uptrend. So what's going to represent that uptrend? And for me, you might know it's very popular in the stock market, but VWAP, I use distance from VWAP as price being in a strong uptrend or in a strong downtrend. And then entry, I matched up some started off with the purge pattern that I told you about when I first started trading with. It was like an ICT kind of entry, and then in order for me, I would see the market do something similar, but not exactly, and it would just go on without me. And I'm like I don't want it to be as exact. So then I put some moving averages to kind of catch a wider net. So that catches a wide net of pullbacks for me. And yeah, it all kind of works together and it filters out a lot of the rangy days, a lot of the choppiness that can happen on the 1 minute chart. It is kind of difficult to do if you don't know what you're doing. So the 1 minute can be tricky.
100%. I love that you mentioned anchored VWAP. Where did you get that from? From Brian Shannon? Was that introduced to you specifically by somebody? I had him on the podcast, and after I had him on the podcast,
Good.
bro, I started looking at it on my chart, and I was like, "This is better than an EMA." And now the trades that
Yeah.
even the trades today, like I use my A2 strategy, which is a break of the 21 EMA, but I have an
Mhm.
indicator like you that it tells me when that happens. So I don't even need the EMAs on. So now I'm doing A2s that are off anchored VWAP. So I'm getting a good price. But I'm like you, if it's moving up, if we've been above anchored VWAP all day, like we were today, I'm only looking for
Mhm.
longs. I'll never sell something that's
Exactly.
up there. And yeah, so dude, we trade probably very similarly. That's so funny.
Probably so.
Yeah.
Probably so. And you said the 21. I actually used the 20 EMA in part of my
So there you
entry.
go. Yeah, that's exact. And I mean, like the thing about, well, tell me your opinion. I think that trading strategy is not as important as we all thought it was when we got into trading. there's so much more to trading than the strategy. There's so many winning strategies. I think that it's important, but it's not the most important thing. I think there's like much more. And that's why trading is hard, because trading psychology is after that. You have to really try to master yourself. What do you think about that? Do you think that strategy is, the bottom of the foundation, or do you think it's more important than I'm giving it credit?
Definitely not. It's not as important as, we all thought it was. And because like even like the systems that I kind of developed early on, like looking back, it's like I think they would have worked, like because you know the cycle. You get this system or learn it from somewhere, make it yourself, and then you go on a winning streak, and then you hit a losing streak, and then it's okay, this system doesn't work. On to the next. And even like the coaching, so like I'll teach people my system, and some people will make money with it, but then other people will maybe trade it for a week or two, and then they're done with it. But the people that make money with it, I've seen have been trading it for at least 6 months to a year, because they've been through the down periods and the up periods, and they know that the down periods happen, but they're nowhere near what the up periods are. So that is difficult in its own, being able to stick with the system, but they're not definitely not. I would say a trader should probably develop discipline before they look further into developing a more robust system.
100%. I
But
mean,
yeah.
literally today, bro, in our group chat, talking to this guy who just can't control the urge to trade. He can't have a flat day. And then
Mhm.
Lance Brightstein from SMB Capital, Lance probably from Twitter. Lance tweets something about trading, and Mike, the guy, he goes, "Is Lance talking to me?" So then I get on Twitter and I go start replying to Lance, and I'm like, "Yo, how would you coach a trader who is struggling with over trading? Like they can't sit
I think I
still."
saw your tweet. Yeah.
Yeah, it's crazy. So we go back and forth, and he's like, "This is basically," I'm not going to remember exactly what he said, but it was a James Clear quote, and he was saying like, if you can't, or if you shouldn't eat cookies and ice cream, and you struggle with discipline, don't keep cookies and ice cream in the house. If you can't control
Mhm.
yourself from trading, trading might not be for you. But what I think,
Mhm.
like, people have to have a conversation with themselves, and this is what I said to Mike: if you've shown
Mhm.
discipline, if you've shown you can exercise discipline in other areas of your life, like Mike has, because he's been successful in his real estate career, then you can show
Mhm.
discipline in trading. You just have to make that decision. And I think everybody has a different
Yeah.
pain threshold of like, okay, I've taken enough losses. I'm done over trading. I'm done doing these. Now I need to control this. I think everybody just has to touch that point of pain. Do you agree?
Mhm. Yeah, definitely. And I think that was the same thing for me, because even because I developed my system about 2 years ago, and it's gone through changes, but it's always worked. And when I developed it, there was a period of like months where my system would produce like 2R, and I would be down negative 2R. And then the next day it would produce 1R and I'm down 3R. And it was just a cycle of going through that for months. And then I was just like, okay, cut everything out. And I just was like, I'm going to follow my system. And, that I hit that pain point, I guess, and made that change. And that's when I started getting funded and getting payouts and things like that. But that is definitely you definitely probably, I mean, most people got to hit that level. There have been outliers that don't, but most people will have to.
Yep. And when you got funded the first time, because we all were like funded back when there were still time frame challenges, do you feel like the
Mhm.
time frames on the challenges helped you, like kind of put your back against the wall and made you figure it out? Because I feel like that's what it did for me. Like when you had to make a certain amount of percent, like you did have to get creative in what you were doing. Like you couldn't just keep doing the same thing and hoping it would work. You'd have to try different things. You're
Yeah.
running out of time. Do you feel
Yeah.
the same way, or did you hate the time frames?
Well, I was as aggressive as I am now with the challenges, but I will say it made, because like I've never even came close to hitting the time limit um on a
No, you're
challenge,
done.
even
You're
from the
done that
beginning.
challenge way before that, bro. Come on.
Yeah, yeah. But the very first challenge that I took, I passed. Both phases. I ended up failing before I got the payout, but I ended up passing them. But I would say it does make you be more creative, even just challenges alone, because like I've done things where I've scaled into winners I mean scaled out of losses too. Like that was a weird one for me. I heard about scaling out of wins, but like as it's going against me, I'm slowly getting out like kind of giving it a chance, but slowly getting out. I've done some weird things, hedging and just everything with prop firm challenges, trying to pass them and get them out the way. But they definitely make you more creative, I would say.
Sink or swim.
Yeah.
Yeah, pretty
Either
much.
way. Yeah.
I wanted to ask as well, Rich, like I saw obviously on your tweet, I'm looking at your Twitter now, failing what 25 challenges, you know, in with funding companies, prop firms. What do you tell someone that has failed a couple and hasn't seen a payout? What do you tell that trader?
I think most traders don't have they probably don't have a system. Now if they fail, I mean, failing is, even if you have a system, you can still fail, but just to kind of go over or make sure that they have certain things, I want to make sure, one, that they have a system, two, that they're following that system, because if you can't follow the system, you shouldn't expect to pass your challenges. You also need to
You
make
said
sure
that so
system
slow, bro.
has
But wait,
edge.
can you say we gotta say it one more time, because you said it so fast and we just go like, gotta say that slow. If you can't follow the system, you're not going to pass the challenge. Like, that is very, very
Yeah.
important.
Yeah, if you can't follow the system, and even if you do get lucky and pass the challenge, you're probably not going to make it to payout. And if you do make it to that payout, you're going to fail eventually. Like, it's a slippery slope. And when you might get lucky for a while, but when the luck runs out, it's not going to be pretty. So yeah, I mean, you have to have a system. You have to be able to follow that system, and you need to make sure that system actually has an edge. Now, if you're trading kind of more so discretionarily, it's a little bit more difficult to do that. But at least at the bare minimum, you have to follow your system. Like, you just have to. And I kind of tell people that have discretionary systems that, I mean, it's okay to have one. I think it's easier for people who are newer to trading to have something fully mechanical. But if you have a discretionary trading system, you have to journal your trades, because the only way to collect data on a discretionary system is to kind of collect data and forward test, because it's not just the system, it's also how you're interpreting that system. Because you can't go back and try to interpret it, because you won't be thinking the same in live market conditions. So yeah, it's depending on their system, you have to collect data. You have to know that it works. So
yeah.
Yeah.
Find patterns within the discretion. Even James is super discretionary, and our group like knows him for that. And I feel like even though he is discretionary, he still is trading strategies that we've back tested as his foundation of entry, right, James? Like, how would you describe what you do, James?
Well, today was a great example. I was shorting.
Well, I heard you tell people that you're an accountant now. Is that true?
Yeah, I don't know. I tell people
you look like a rugby player in that shirt, bro. So maybe you're a rugby player today.
I don't have time. I don't know about you, but I don't have time for when someone asks me what do I do. I don't have the time to tell them, I trade the financial. Like, they don't take it like as seriously, or they ask stupid questions. So I just say I'm an accountant. And in the finance,
you should say you work for the CIA. I work for the CIA. Yeah. That's why I shaved my head so I could blend in.
But no, like today was actually a great example. I was shorting pound yen, and it wasn't actually an entry system that's backtested, but it's based off the theoretical frameworks of what Austin has backtested with ASFX, with the EMAs. But I was chasing momentum, and it was just a momentum play, but still based off the theoretical frameworks of what I wanted to be doing. Like, someone actually hit me up on the Discord and was like, dude, you took it off the ATMA, and it's like different. And I had to explain, I was chasing momentum. And I think if you know what you're doing, and I think the only thing that really matters is, are you managing risk? Like, that's the only thing that really matters. If you can take an entry based on your feel for the markets, if you have some sort of experience, like I've been trading for 5 years, I still feel it's quite new, but you've always been trading the double amount of time as I do. But when you have experience with trading one system, which I've been doing for 4 years, that feel of the market. And I think that as long as you're managing risk, you keep yourself in the game. If you out here, blowing 5% on one trade, and you're probably not going to be here long for the next 5 years, But
and I would even say too, bro, like, managing risk in that trade is, if I'm going to take a trade that's not like on my edge exactly, right? Then you're going to, you can't move the stop loss. You can't be in it too heavy. And it's not like you're managing risk poorly there. So it's just understanding that discretionary entries look different when you're an experienced trader, when you're someone who's been trading a system for a while and can start to see a different way and feel in a way the market. And then again, you live and die by it, bro. If you lost a trade, you're not going to blame anybody. And everyone's going to say, well, you didn't trade an ASFX entry. Like, what are you doing? You didn't trade the strategy. You were feeling the market. Like one of the guys today in the chat, feeling the market. And I'm like, you want to get upset about this trade when it's not your system trade? That doesn't make any sense. You should be upset with yourself. The trade's not the problem. You're the problem. You didn't follow the system. But again, experience gives discretion. And I think both of you show that differently, but also similarly too. So it's good. James, when you got into the funding stuff, were you trading the 1 minute? Do I remember that correctly? Weren't you trading lower time frames originally, or am I wrong?
You are right. But that's
look
why
at my memory, bro. Look at my
that's
memory,
why I've got
bro.
no hair. That's why I got no hair, Rich. I was trading the 1 minute chart. That's why I got no hair. But yeah, I was trading the 1 minute chart. But again, I was trading currency. So completely different to what Rich is doing, trading the indices, and that obviously move a lot more.
And you didn't have any of that WAP. I know now you need the
exactly.
WAP.
I didn't even know what VWAP was at that time. So definitely, yeah. But
right.
I have seen a couple of your posts on Twitter, Rich, about I think I read something about, it must have been about a year ago, something about, just maybe speak about this, about when it breaks VWAP 3 times or something like that, then you take it off your list because there's no clear trend, something like that. Am I right in saying something like that?
That's so one thing that I ran into was being able to cut out ranges, because if I think most systems break down to either reversal trading systems or trend trading systems. Like that's what I see like 99% of systems as. So I knew my system was a trend trading continuation model. So in a ranging environment, it's going to lose money because like my entry model, any entry model doesn't make money 100% of the time. It only works in a certain context or criteria. So a ranging market was the one that it didn't work in. So in order for me to um uh objectify a range, if VWAP is kind of, it's the volume weighted average price. So it's the average price people bought and sold at. So if it goes above that price, I would say I'm bullish. If it goes back below that price, I would say I'm bearish. If it goes back above, then it's kind of like mixed. Like buyers can't keep and get control and hold control, and sellers couldn't keep and hold control. So now it's kind of back and forth. And unless we break over that high of the day, or we break under that low of the day after we kind of crisscross it a few times, I won't get involved because nobody's in control. And if nobody's in control, I really don't see it as high probability. So that's been a game changer for me.
Nice.
Love that. Yeah, love that. I have another thought. Can we talk about a couple of people that are also on Twitter? I want to get your opinion. I had Tori Trades on the podcast. What do you think of Tori?
She's good. She's an example of what you had talked about earlier with the system and how important it's not. Because if like somebody, like let's just say ICT's concept, somebody were to say, okay, I'll teach you ICT's concepts, and Tori came and said, I'm going to teach you trend lines. Like, especially a lot of new traders, they're going to go straight to ICT because usually we think that complexity, the more complex something is, the better it must work, right? But that's not always the case. And I think she's a perfect example of that it's not the system always. It's at the end of the day, most of the time, the trader. And she trades trend lines and makes, a lot of money doing it. So yeah, I think she's a perfect example of that.
100%. I totally agree. When I had her on the podcast, I didn't realize she was like my age, a little older than you, and like she had been trading for so long. Her uncle taught her how to trade, and he was like working at a big fund or something, and he was saying this is how they do it. That simple. And that just, it's funny because I do these interviews, bro. I do a couple of them per week, and I like everybody rubs off on me in a different way. I had Kudelli on the podcast. I had Anchor Brian Shannon on the podcast. I start trading more 1 minute, more Anchor VWAP. Like everybody rubs off, and she rubbed off on me like that. Like simplicity is actually important. It's not even key. It's very, very important,
Yeah,
So I think she's a good example. She's a good example of that. How
To
about
touch on,
no, sorry, good.
I was gonna say, to touch on that with
Yeah.
simplicity,
Yeah.
because even my system, I had to cut out some stuff. the more complex the system is, the harder it's going to be to execute it in real time. It might look good in the back test. It might look good when you're, back testing it and the numbers might look good. But the more complex it is, when you got all these numbers and money thrown at, like, you know how trading is. When you got everything thrown at you, the more complex the system is, the more likely you're going to make a mistake, not execute it right, and it just it doesn't help you at all.
Yeah.
So,
Okay. Love that. I love that. James, do you want to add anything on simplicity? Were you about to say something or no?
Yeah, I mean, again, like that we all know, it's not never the strategy, it's the trader. I mean, you can trade an 8 and 21 EMA crossover and people look down on those sort of things, but it can make money. It's all in the mind. Like, as long as you know how to manage risk and you stick it out during the tough times, you're going to be around and stay true to the process. You're going to be around for many years to come.
Love it.
Yeah.
All right. Next person. This guy, Mamba FX. He's on this Twitter thing going all over the internet. What do you think of this guy, bro? He looks like Post
Mamba
Malone,
FX.
doesn't he? James, why are you
I
laughing,
think
bro?
so.
Rich's reaction to
That's the guy. He's big on Instagram too, isn't he?
And YouTube. He makes like crazy. He's got like 6 kids, bro. He makes crazy videos about like trading and Lambos, and he's got face tattoos. It's crazy. It's crazy.
Yeah, I don't believe the hype around him. I think he's a better marketer. I don't think I mean, I wouldn't doubt, because I mean, you'd be surprised. Like, I thought someone like Cameron, you remember Cameron Ross?
No, who's that?
Cameron Ross, he was kind of around with Tim Sykes. He
The
was
redhead guy with the ponytail?
that's him. Yeah,
His name's,
yeah.
you're saying it backwards. It's Ross Cameron.
Oh, Ross Cameron. Okay.
Yes,
Like
yes,
him,
yes.
like he wasn't very flashy or nothing. He just was kind of, he was just kind of doing his thing. But turns out, he was a scam. He would take people's money, try to trade and lose their money, and then do the same thing over and over. And, after seeing that, now it's kind of like who do I trust? And that being the more flashy guys are usually, the people you should not trust, but that's who people gravitate towards.
Isn't it
I
crazy?
wouldn't
It's like
trust him at
literally
all.
the opposite, right? 100%. Do you remember there was a company, I think it was Raging Bull, and it was this guy Jason
Yeah.
Bond, and they were on an airplane,
Yeah.
and they're like, "I'm going to teach you how to trade options." And it's like, bro, in today's day and age, how are you going to be on a jet running hundreds of thousands of dollars of YouTube ads thinking you're not going to attract the wrong attention? You know what I mean? But people bought into their thing. But then what ends up happening to a lot of these guys, like even Trader's Domain with, Uncle Ted and all that shit. CoffeeZilla exposed them, bro. Did you see that?
No, I didn't see that one.
Oh man, do you remember Uncle Ted from back in the day? Like him and Raja Banks used to do live streams. You remember that?
No, so that must have been before I switched over to Forex.
That must have been. So they used to run live streams all the time, and then Uncle Ted, the brokerage was, I think, called Trader's Domain, I think is what it was called. And you can
Doesn't
look
he
this
have
up.
one right now?
Yep. And CoffeeZilla is the one who exposed this whole thing. It's this 3-part video on CoffeeZilla's. Do you know who CoffeeZilla is? He's like an online reporter. Oh, bro, you'll love his stuff. He exposes like scams all the time. So I had a guy in my group. His name was Ryan. Ryan got scammed by this guy named Ricky. Okay. Ricky was on Instagram. He was going by the name Risky Ricky, and he was teaching people trading. And he just took my buddy's like $7,000 or $8,000. So my buddy gets interviewed by CoffeeZilla, which introduced me to CoffeeZilla because he brought up ASFX in the video. So then I start watching CoffeeZilla. He starts exposing Logan Paul, and he starts exposing all these scams, bro, like legitimate scams. And then one day, Trader's Domain I think that's the name of the brokerage. This is that he's the one exposing. And it's because they've attracted millions of dollars of investments into this brokerage that they're doing currency trading and flipping people's money. What ends up happening is that him and I think Raja Banks, I don't know if they split or Raja dipped off to Dubai or whatever, but it doesn't seem like they're as together as they were. But it's still like Raja is connected to this scammy broker that now all over everybody knows was a total scam. Like there's a guy, Pace Morby, is a very well-known real estate guy that does these special type of real estate thing called Subject 2. Well, Pace put $1 million in to Trader's Domain with the trader there, Ted Safranco, Uncle Ted, and Uncle Ted was supposed to trade this money and grow it. Well, Pace, had been dealing with money in the past, and when they deposited, he gave him $1 million, I think. It was either $1 million or $100,000, doesn't matter. Instantly, the money showed up in his trading account, and Pace said, after the fact. He goes, that day I knew we were getting scammed. Because when you wire somebody money, it doesn't just show up that day in your trading account, you know? So
Yeah.
yeah. So like, even when people know they're getting scammed and they're being flashed to death about the success and the crazy return, they still do it, bro. You know what I'm saying?
Yeah.
Even guys that have money and
Yeah.
they're successful, they still get sucked into it sometimes. It's crazy.
Yeah.
But now I just gave you a whole bunch of shit to go look up, bro, because it's funny. It is funny.
Yeah, I'm gonna have to look into that one because I've seen it and I've seen people call the brokerage a scam, but I've never known exactly why. But I do see him like promoting it a lot and stuff like that, and then seeing that that's like the only like broker that he will
Yeah, you would
trade
never
on.
trust, bro. You can never trust that. Like, never,
Yeah,
never.
because
What about that?
even like prop firm traders, like they could easily, you know, take like Paladin and Omar, they own a prop firm. They could
Yeah,
easily manipulate an SFT account if they wanted to, but the only
100%,
results they post are from, you know, the other prop firms. So yeah,
100%.
I
And
can
yo,
never trust them.
I respect those guys. So let's talk about guys that are like, I like a lot. I like Omar. I like Paladin. I like Riz a lot. You went and met up with them, right, in New York?
Yeah, yeah. About 3 or 4 weeks ago, I
Yeah, you
had
guys
met
were
up with them
boxing and playing basketball
Yeah,
and
he was
Uh-huh.
playing.
Rich was showing him the basketball skills. I saw that on Instagram.
Yeah. Yeah, they're lucky. So I tore my ACL last year, so
Oh shit.
Oh,
that was probably that was probably about 30%. About me at 30%.
you didn't want to
I'll
yam
go
on them
back
too
and
hard, Rich. Fuck.
I've had that in Rich. I played professional rugby before trading. I tore my ACL on my left knee, so I know what it's
oh
like. Bro.
man,
Yeah, it sucks.
yeah, it sucks.
Yeah, yeah. So when you met up with them, what was the inception behind that? Were you just like, I'm gonna go meet up with these guys, I want to see what SFT is about, or did they like hit you up and say like, you know, come trade
He
over
was
here?
getting
Were
all
you
the
fun?
payouts. He was
That's
taking all their
Yeah.
money.
That's what it was.
Yeah.
So they posted it like they're like the first person. Hold on. They're like the first person to get a payout from SFT. They'll fly out to New York and like hang out with them and do an interview. And I was like, I'm gonna do that. So I ended up I mean, I knew I could pass the challenge fast. I just needed to be very aggressive. So that's what I did. And then I locked in a payout. Um and then they flew me and my girl out there. We went out there and yeah, did the podcast with them, played basketball, went out to dinner. It was pretty cool. Because I really it's kind of like that. Would you rather have 100,000 or go have dinner with, you know, Jay-Z or somebody? So I was just kind of like, you know, I haven't met in person. I haven't met a lot of successful traders, and you know, they're successful traders, and I was like, I have to, you know, this is an opportunity. Like I didn't really care about the payout. I was more interested in going out there, meeting them,
Bro, you're
and you know,
smart, bro.
picking their
Secure
brains.
that quick bag on the payout, get
Yeah.
the trip flown up there. That's smart, bro. That is so smart.
Yeah.
Yeah, I like them a lot, bro. I think that they're doing it right. I mean, especially like all with the bullshit right now with my Forex funds and everything, and everybody changing
Mhm.
it to simulated and virtual and this. It's like, at least those guys are honest, bro. Out of everybody in the industry,
Yeah.
there's some honesty
Yeah.
there.
It's straight
And there's
up.
some honesty in other firms. But I mean, tell me your
Yeah.
opinion, Rich. I feel like it's the wild west of funding companies right now, you know, and there's going to
Oh,
be
definitely.
crazy shit that happens. I'm sure it's not over. And then things will change, regulation, maybe, whatever. And then it'll adapt.
Yeah.
The industry probably doesn't go away. Wouldn't you agree? Or do you think what do you think?
So I say I don't particularly know because the thing is, CFDs are elite, at least for U.S. clients. Like
Yep.
prop firms as a whole, I don't think they'll go away. No, but for U.S. clients, it's kind of tricky because their CFDs are illegal here. Like we're not supposed to be able to trade them because that's what happened with the company that I traded stocks with, TradeNet back in the day.
Yep.
You paid them an account. But with them there was no challenge. You paid, was it a challenge? I don't remember if it was a challenge or not, but you paid them out and then they gave you a certain amount that you could trade with. Um, but they're still up, but they can't take US clients. So for me, I kind of view it as it might just be a matter of time where they say, oh, we can't take US clients.
That's what I was thinking too. That's what I'm a little worried about. Or they make it so
Yeah.
there's like a US account at these these firms where it's like US traders have to do this account where you don't get CFDs. I think I'm just going to go to futures, bro. Like, wouldn't you just go to futures because you trade NASDAQ and we can get funded with futures?
So there's actually a new firm. They're very small. You probably never heard of them, but they have a different kind of model where they're so SMB Capital. Well,
Yeah,
Lance, so
of
SMB
course.
Capital.
Yeah.
So it's kind of like they're taking that approach and doing it remote. So it's called Traders Launch, and they let you.
Bro, they
They're
DM'd
not.
me. They've been DMing me, bro. They want to set up a meeting. It's
They're
right here, third in my inbox. Should I set up the meeting? Should I take the meeting?
Yeah, oh yeah, bro. They're legit. Like I got on the call with them, I talked to them and everything. Like they're not just taking your money and putting you in a simulated environment. I mean, they'll do that for the challenges, to simulate a challenge. But once you get funded, they're taking their actual cash, putting it into an actual trading account and letting you trade that for them. It's not like everything else. Like they're 100% like this is
Putting it into
real
a
money.
real interactive
Yeah.
broker's account or whatever.
Yeah, exactly. I think
Wow.
that's the broker that they have me sign up
Yeah,
with. I think
that's because that's what I saw. I checked out their
that too.
website. Yeah.
Uh-huh. Yeah, so that something like that, I don't think they'll ever go away. And they want you to make money. They're not losing money if you make money. They're making money, which is, something that you also
That's the
want to
prop
have.
model. These other firms, I call them they're funding companies. They make money off of failure. The prop firms actually break you off a piece of the nut, and then they make money when you make money,
Yeah.
Do you think, Rich, you think you're ever going to go like private? You think you'll ever go like the hedge fund route or try to take it private?
I don't think I would. I don't like dealing with too many people like that much. I think the most I would do is trade with the prop firm. I think that would probably be kind of because that's kind of why I like trading. It's kind of secluded. You don't have to
deal with
worry
anybody's
about other
bullshit.
people. Yeah, exactly. It's just you in the market. So I don't think I would. I don't think I would go that route. Especially, I mean, I don't need to. I don't know. I don't need to be super, super rich. Like I just want, if I can make 100, 200, 300K a year consistently, I'm fine with that.
Realistic expectations are big, bro. I think one of the reasons I think one of the reasons that one of the guys I'm coaching struggles sometimes is because they have unrealistic expectations. They want to make 20 grand a month after their first 4 months of trading. It's like, Jesus Christ.
Oh no.
But what I like about that is that how Rich says that is that if he can make 100, 200, 300 grand a year, like he'll be super happy with that. The thing is, you doing that from your home without having to deal with any customers, clients, anything like that. Like you don't have to, you can go to lunch when you want, you can go on a holiday with a girl when you want. Like it's not about rich, it's about being wealthy, excuse the pun. But like you can go on holidays whenever you want, do whatever you want, when you want, and you're making good money. Like let's not act like 200K a year is bad money, bro. That's nice money, especially when you can do whatever you want, like, and when you want. So yeah.
And somebody had posted something about that earlier today. They were like, I think one was like, what was the bare minimum you would need to make in order to kind of just, maintain
I saw
a little
this.
bit?
Yeah, I saw you posted this.
Yeah. And then 2 was live kind of comfortably, and then 3 was like dream. So like I'm 24 years old. I have a girlfriend, but I don't have kids. I don't have a lot of responsibility. So my dream is like 120K a year. If I can do 120K a year, the thing is it's not 120K a year like sitting down. Like I'm mobile. Like I can be anywhere that I want to, which is a big thing for me. Like that I'm fine with that. Probably even less than that, I would be fine if I could travel, get an Airbnb sublet for a month, and go a different place the next month. Like that's my dream life as of now. Like
bro,
trying to do that.
A lot's gonna change over the next 6 years for you, bro.
Definitely.
Yep. If time fucking flies, bro. I'm sitting here 28, almost 29, and I'm like, damn, 24. That was like yesterday. You know what I'm saying? Like that was like, it really feels like that, bro. It's crazy. How old are you, James? Aren't you? Didn't you just?
Yeah, I turned 25 in August now.
Yeah, so I mean, for both of you, it's amazing. It's crazy how many, like, Paladin and all these young guys like yourself, bro, just fucking crushing it. It's amazing. It's amazing. I love it, bro. I love it. So let's do this. Last question for you, Rich, the most important question. Time travel back to when you first got started in trading. One piece of advice for the younger self. What is it?
One piece of advice. I think this would go back to where we talked about system versus discipline. Is I would just tell myself, don't focus on the system, focus on, developing the system or discipline as a whole. Because I mean, you need discipline to be able to develop a system and follow a system. So I would just go back and tell myself, slap myself and say, focus on discipline. There's not a system that's going to work 100% of the time. That's probably it.
Love that. That is literally, I wish I could copy and paste that into the trading group chat today, right there. I love it. But listen, both of you, I appreciate you guys. Rich, it's a pleasure to meet you, bro. This was the first time we ever met. So hopefully we'll have you back on. Hopefully we continue to build a relationship. I mean, bro, you're not too far. We got to try to meet up at least one of these days. It's really not that far, So same time zone.
I think, how far are you from Miami?
4 hours, but I can fly there in 40 minutes. So if you're ever in Miami, I could be there easy. I'm always there.
I think Paladin just moved out there, and
I know
he's talking about having some kind of event. So we might
keep
all
me
be able
posted.
to meet up.
If you, bro, I'll send him a message. You keep me posted. I'll be there. If there's something going on, I'm there 100%. But let's do this, Rich. I'll make sure everybody's got the links to your Twitter down below so they can connect with you. That'll be the best thing, I think, right? Twitter's best to connect.
Yeah, Twitter.
Cool. Twitter is down below, everybody, so you can go check that out. Make sure you subscribe. I'll put James's Twitter down below as always. Make sure you follow James. James has been posting more content as well. But we appreciate you guys. If you stayed all the way through the episode, let us know in the comments if you guys have any questions for Rich. We'll bring those up next time. Maybe we'll have him back on in a couple of months. But for now, we'll put a pin in it. And I appreciate everybody again. So Rich, James, thank you very much. Audience, we'll see you in the next one. Thanks, everybody.